XRP emergency watch in 24 hours. Hey, what's going on, everybody? Welcome to the channel. Today, XRP down 2.25%. We have an hour and a half left in the daily candle. And just so you guys are aware, it did run exactly into our support line that we have been talking about here at 45 cents. If you remember, we do have the 45 cent, 55 cent, 65 cent markings on the way to the upside. Those are based on supply and demand zones based upon the daily charts. To the downside, though, we do have a 35 cent marking for a support level. And that does also coincide with the potential bear flag pattern that's playing out here, with the flagpole coming from the top to the bottom of that, and then from the tippity top candle there to the bottom. You could even just play it from the flagpole body top, gets you exact 35 cents. So we're going to cover the charts today. We're going to be looking at the weekly, daily, and the 4-hour. We talked about this happening specifically yesterday. Why are the markets tanking? Because the Federal Reserve came out and announced it is going to continue to raise interest rates. The markets don't like that. The dollar has absolutely gone insane today, an absolute moonshot candle from this morning with this crazy pullback. And then you look at this 4-hour candle, it is on fire right now, absolutely standing tall, very crazy. Right up to the top, though, of our supply and demand zone on our 4-hour charts. That did hit right there exactly. Will it break through tomorrow? That's what we're going to evaluate in today's video. And in the news that we will be covering today, Binance prepares to buy a bank, ? So CZ, the owner, creator, CEO of Binance, has a $1 billion war chest. We will dive into that. Are they actually going to buy a bank? Also, there's a new sheriff in town, Elon Musk, all guns blazing. I've continued to drop a lot of information about Twitter lately. Twitter has some really great stuff coming out. You do want to start getting onto Twitter and getting familiar with it. I've already told you guys over and over that crypto Twitter has some really fire information over there. So for those of you that are crypto degenerates that are always wanting to know about some crypto information, head over to Twitter and you can follow some of the people that I'm following. It'll help you. I'll show you here in just a couple minutes. Also, Strike CEO platform can integrate Bitcoin Lightning payments for Twitter Blue in days. If you'll notice, the theme for basically the past week now has been Twitter. What's Twitter going to do? Dogecoin pump because the Twitter deal. Twitter Blue, are they going to insert crypto payment system? Would it be Dogecoin? Could it be Bitcoin? We'll dive into that a little bit. And also, Ripple CTO identifies key milestone as XRP Ledger sees NFTs go live on the mainnet. If you're not familiar, they've been testing the NFT situation here for a very long time. And also, just so you're aware, NFTs are not just pictures anymore. I mean, they've never really been just pictures. That's just what got popular. But lots and lots of things are going to be NFTs in the future. In fact, everything that's contract-based will be an NFT. You buy a house, your house will have a deed still, but it will also have an NFT attached to it. You buy a car, your car will have a title still, but there will be an NFT attached to it. It's going to be a different way of life. Web 3.0 is coming. NFTs will be involved in that. And we will be jumping into the charts after we go through the news here. So stick with me till the end. If you only care about the charts, feel free to fast forward. That is totally fine too.
If you're ready to earn an extra $200 to $3,000 per day in passive income, just like the Run Guys do every single day, then like this video, subscribe to the channel, then click the link in the description of this video to learn the Run Guys' #1 way to start earning passive income online with crypto today.
Per report from Bloomberg, crypto exchange Binance is stepping up its game and could potentially go into a shopping spree. The trading venue might be exploring buying a traditional financial institution to bridge the gap with nascent industry. And CZ expressed his intention to allocate over $1 billion in potential acquisition in the coming months. The crypto exchanges, following the old industry adage, bear markets are for buying and accumulating. And interestingly enough, when it comes to me and you, we're buying and accumulating some of the coins, but this guy's going to go out and buy a freaking bank. In an interview recently, CZ was quoted as saying, there are people who hold certain types of local licenses, traditional bankings, payment service providers, even banks. We're looking at one of those things. We want to bridge between crypto and the traditional financial world. And if you're not familiar, the ability to buy a bank is not just like, oh, I've got tons and tons of money, I'm going to buy a bank. There is a lot more that goes behind it. In fact, it's one of those things where they, one of those things, the conspiracies they talk about, it's a big club and you're not in it. Well, you have to have friends, connections, networks that will even allow you to get into this position. And CZ says here, he thinks it's a smart move because the platform already operates with banks and has seen many users flocking to these conventional institutions to leverage the crypto exchange products. And in that sense, banks see a spike in their valuation. If the institutions already benefit, the crypto exchange might take control of the entire process and capture 100% of the benefits. And in a recent interview on this topic, CZ was quoted as saying, "We did look at a lot of lenders in recent months because that's where all the issues are. Many of them, they just take a user's money and give it to somebody else. That's not a lot of intrinsic value. NFT use cases have not largely been well built. NFTs for tickets for university degrees. I think the technology will stay overall at a high level. During the bear market, we'll see more market consolidation. There's a lot of risks and a lot of pain, but also a lot of opportunity." And of course, speaking of opportunity, right now, a lot of people's coins continue to drop, right? And that is why we have started a program where you can partner with us and you can actually make consistent passive income with our all-in-one business building website. So make sure you check out the information in the description below. So that way you can learn how to make money in a bear market, in a bull market, in any market. You're going to learn a new skill to take to the next level. All right. And there's a new sheriff. That's Elon Musk on Twitter. And it's been almost a week since Elon completed the Twitter takeover, but the company already sees drastic changes. The billionaire and entrepreneur vowed to eliminate the social platform fake account issue and optimize by giving the power to the people. Some people are talking about how this has a lot of controversy with Musk taking over the platform. And the reason being is that the magnate, Elon, fired the company's entire board of directors and its top brass with cause, and the decision is poised to trigger further issues for Twitter. Now, personally, I've been watching and following this entire situation. He has the complete right to do this because of the simple fact that he took it private. He doesn't need a board of directors. He owns the company outright, all by himself. He doesn't need any help. He can do anything and everything he wants to the platform by himself. So right now, Musk is the sole decision maker at the company, a status quo that is allegedly temporal. According to the self-appointed, he calls himself now the chief twit. The magnate is appealing to his popularity on the platform, exercising a management style comparable to politicians. And here you can see the pump of Dogecoin that has occurred since him taking over. From 6 cents, it did peak out nearly 16 cents before starting its drop now. Yesterday, Elon Musk did announce a new subscription program for the company's premium service, Twitter Blue. It's going to be now priced at $8. Subscribers can verify their accounts, access longer video and audio formats, get priority in replies and searches, and other features. And the reason that he has come out with this is, if you've ever been on Twitter, it is kind of a pain in the butt. That's why a lot of people stopped using it. If you were to make a post that had anything to do with crypto or an exchange, like if you said Binance or you said Coinbase or anything like that in your tweet, you would have literally 50 to 100 people in the comments section that were bots replying saying, oh, this, that, and the other, right? Well, now if you have the $8 a month situation, and you were to comment on someone's platform or post, that would show priority, right? So those actual real posts, not bot posts, will be moving up to the top. Now, of course, Elon framed it in an announcement. Twitter's current lords and peasants system for who has or doesn't have a blue check mark is BS. Power to the people, blue for $8 a month, price adjusted by country, proportionate to your purchasing power parity. And of course, Strike CEO says platform can integrate Bitcoin Lightning payments for Twitter Blue in days. Strike founder CEO Jack Mallers said on November 2nd that the company can integrate Bitcoin Lightning payments for Twitter Blue subscription in days. Mahler stated that the Lightning Network payments, which are instant and near free, should be an accepted payment method. And he says here, my company Strike partnered with Twitter to enable Lightning tips. We even offer the ability to settle these payments in USD, so there's no extra lift for Twitter. Settles and reported like a card payment. This can be implemented in days, given we already have the partnership. And here is the tweet from Jack Mallers. Also a great follow on Twitter if you are on Twitter using that. And the Lightning Network, a layer 2 scaling solution intended to make BTC transactions quicker and less expensive, has continued to collect use cases. For instance, the introduction of Bitcoin as legal cash in El Salvador has provided the platform with real-world use case. All right, now the big news. XRP Army, here it is. The Ripple CTO identifies key milestone for the NFTs on XRP Ledger. David Schwartz, Ripple's chief technology officer, says the new blog post that RippleX engineers built the new feature using no smart contracts approach to increase its cost effectiveness, resilience to hacks. And he says here, XRP Ledger NFTs were also designed with efficiency in mind. Significant transaction expenses are a fundamental problem for developers minting NFTs and lending layer 1 blockchain solution. Gas fees alone on some chains can be add up to hundreds of dollars, and final price of an NFT and vary based on a given network's user traffic and congestion. And if you were a part of the May, June, July NFT explosion of this previous couple of months, and you were doing transactions, sometimes the gas fees were $50, $60. There were some times when the fees were so high that you literally couldn't mint them just because of the certain period of time during the day. Like there was one time I tried to mint an NFT. It literally was like $950. Obviously, it was a very rare case, but I'm buying an NFT that costs $50, and this thing over here is trying to charge me $900+. Just, it was crazy, crazy, crazy. That was also prior to the Ethereum being on a proof of stake network. So we'll see what happens when really big transaction volume starts to happen again on a next bull run for Ethereum. With XLS20, developers can support more NFTs at lower costs and do things like leverage auction functionality and an efficient storage mechanism, direct a cut of secondary sales to the original minter on the XRP Ledger, or even co-own NFTs. Schwartz notes that a few NFTs have already been minted on the XRPL. The CTO says NFTs on the ledger are built with automatic royalties. For creators, NFT transfer fees provide them a share of the revenue when the NFT is bought and sold. They can also designate a third party who mints and sells the tokens on their behalf. With on-ledger NFTs, the XRP Ledger is an attractive destination for developers to build new NFT applications that support minting, burning, and trading at scale. All right, so regardless of the news, we do see the charts have been trading sideways. We're having a little dip back down to some of the previous lows that we've been at recently. The news that did come out today, if we go over here, this is another thing I want you guys to be able to learn when you're on TradingView. If you go to the calendar section here, and it's called the economic calendar, it's going to show you all the important information that recently came out. So obviously, today was a big day. We can scroll back up. These are kind of grayed out now because they've happened, but the information here that's important was right here. Fed interest rate decision, previously 3.25. Today, it was projected to come out at 4, and it did hit at 4. So it did actually rise interest rates up to 4% now on the federal base. So the federal funds rate are now 4% for interest. Then came and by the way, when that happened, we actually had a pretty good spike to the upside when it was announced. But then Jerome Powell came on and said that we're going to continue to fight hard for inflation, meaning he didn't come out soft and be like, oh yeah, next time we're going to not raise. He was like, we're going to continue raising as much as we want, as much as we need to fight inflation. So very, very hawkish on that situation, which in turn, when the interest rates for the federal funds rate goes up, the amount of money that the Federal Reserve collects goes up, meaning that the dollar gains strength, right? So as we see here, everything crashing in red except for the dollar, and the dollar climbing pretty significantly today. 0.5% on the dollar is a big deal. So as we take a look here on our charts, we can also see that it's been boosting for quite some time. It came down and hit our supply and demand level down here back on October 27th, and it's been climbing to the upside since then. And correlating with that, the opposite is true with the cryptos. So as we take a look, XRP, luckily trading sideways, but when we take a look at something like Ethereum, it has started its crash over the same basic period here. So here we had the first day down, the same day that the dollar went up. We had a couple of days battling back, but now it is finally coming back to reality of where it's supposed to be. Also, interestingly enough, if you guys remember when we were following closely the moon cycles, the new moon came out, right? So the new moon, which was this one here, indicating usually a push down on the price of cryptos and also stocks and such. And it took a couple of days rally, but it is starting its drop now. We can also see here when we had the full moon, it really pumped to the upside. And as you can see right here, the full moon mark is the darker moon, new moon mark is the brighter moon on the indicator. And we've talked about that a lot of times in the past. And that's another thing that we have been talking about specifically with XRP. It's been more resilient than some of the other coins because it's just been trading sideways. It was trading up in this ascending channel. It tested the breakout a couple of times. If you guys remember just the other day on the 31st on Halloween, it did do its dip down and it automatically retraced back up. The bulls came in and just battled it all the way back up into the channel. Yesterday, it tested down, battled back up again. Today, on the full daily candle, we do have 1 hour left, and it was quite the push down. We don't see the bulls quite kicking back in. It did tap off of that 50 exponential moving average so far. That is holding support. We'll see if we get the continued drop tomorrow. We are also still in this bearish indicator here for the RSI. We're using the TDI plus RSI divergence. We're in a bearish situation. We have been since the flip here. Once the RSI crosses below the market baseline, that's when it is considered bearish on the indicator. And we have been going lower since then. You can see last time we flipped positive here, we had a nice run to the upside. So we'll have to keep an eye on this. Are we going to be returning back to these 35-cent levels? Now, where are we getting these levels from? Why could it possibly come to that? When we switch to the Heikin-Ashi candles, this gives us our supply and demand zones. We do know that we have an absolute heavy-duty support right here as well, though, at 41 cents. So if we start this collapse, this 41 cent is a really heavy-duty support level. It may just go to there and rebound back. We'll have to continue watching and following on what's happening. But if it were to break there, it would really free fall from there to our 35-cent level. And in fact, our actual supply and demand zone, if we turn off all indicators and drawings and just have the naked chart here, it is the last blue candle before the up move, and that gives us this right here. And that really brings us to the 34,364 zone. But we do have these levels of support before the drop. Another really nice indicator that you can use is the Makachaku's Trading Tools Liquidity Visualizer. And when you click on this, it'll show you where the liquidity points are. So where price could go to stop people out, right? So this is basically where price came down and where a lot of people will have their stop losses set. So let's say you got in a long position here, it's running on. By the way, I am not a financial advisor. This is not financial advice, just financial entertainment, financial education. Do your own research. Do not buy or sell anything because we talk about it on this channel. As price continues to ride up and it comes and checks down, people will move their stop loss up to this last drop down zone, right? Because if it goes up and then here, and even if it comes and checks, it's not triggering the stop loss. Well, right now, as price is continuing to drop, it did just wick out these right here. Now we can actually switch back to Japanese candles. You can see it took this level out here. Stop losses gone, right? So liquidation there. If it comes down a little more, could liquidate these right here at this level of 44 cents. Then it could come all the way down here, 42 cents. Then the real heavy duty liquidation level is this one here at this 41,700 level. Because if it came down, it would be liquidating basically all of the move that happened here. People that are starting to move their stop losses, they could be getting liquidated here. They would be liquidated in profits, but still the market makers could very likely do something like that. And then when we turn on our TDI again, we are still tracking downward momentum wise. And then when we flip on, when we flip on our weekly candles, you can see we have now crossed to a bearish crossover. We do still have the black background or the green background writing. So we are still potentially bullish on the weekly. But if we were to drop down and swipe out all this liquidity on the weekly charts, then we're less likely, because at that point, we may have moved down to market baseline, flipping us bearish again and seeing what's going on there. But currently, the RSI trend line, we go ahead and do a trend line from the most recent low of the RSI, and the most recent spot it hit was here. So price coming, or RSI coming back to here, would be a likely potential, and then a bounce back to the upside. I don't see it actually crashing that. But in the same time, price could likely come down on the weekly charts, swipe all this liquidity out right here, create a new lower low on the weekly charts, create a new higher low on the RSI, giving us a bullish divergence on the weekly charts, boosting us to the upside for the actual bull run. So with these lower level liquidity grabs coming and potentially making that happen, the most potential lowest low that it could be coming to would be this guy here on the weekly chart, this candle, getting to the bottom of that 24-cent level. And then that would wipe out all of this, but then it would leave all of this upside liquidity that it would need to go and capture as well. So it'd give us the opportunity to make that real big move to the upside. But let's talk on smaller time scales. So here we have the 4-hour time zones. And if we go back in history on our 4-hour candles, this would be a historical mark that we would probably want to come and take out, 43-cent level. You can see it's gotten to this level once, where it took this level and this level and this level out. So now if it were to come down, swipe all of that and move to the upside, that's a possibility as well. Does it have to get all the way down here to these 30 cents and so on? No, it does not. Is it possible that it comes to this 32-cent level? Yes, it definitely is. All right, so that is the downward movement. So that's what we're looking at. Just because we've started to make the break to the downside, we're looking at our weekly charts here. What's really, really exciting, though, is if it doesn't make this big move to the downside and it continues its rally to the upside, where are we going there? Well, we have this really, really exciting level right here, 78 cents. So if we were to take off, right? So this is the takeoff zone, come back, retest the zone a little bit. And in fact, if a retest were to happen, if we were to use the Fibonacci, go from here to here, the retest would come down to this 34-cent level max, right? That 0.786 level of the Fibonacci from the most recent swing low to swing high. It comes and tests this zone and then takes off to the upside. Look where our 786, the opposite level, gets us right there to our weekly supply and demand zone, 78 cents. So there's some good news to look out for as well. Do we come back down and check that level down low? That's what we're keeping a very close eye on. Make sure you subscribe to the channel so you can follow along with us as well. Let's go look at Bitcoin and see what the charts are reading for us over there. Okay, so here on the Bitcoin charts for the daily Japanese candles, we are having a similar issue here. Now, Bitcoin has dropped. It also has flipped to the red background. So this is like semi-bearish because it has not flipped to the solid black background. It's still green, but it has the red background fill. What we've seen happen, red background fill here, we had a significant drop there in the past. Right now, it did come down. It actually got to the bottom of one of our 1-hour supply and demand levels here that basically got really close to that $20,043. So a low of $20,000, but it held as a support. So we do know that we could be holding support there at that level, 20,000. If it were to break that level, we could see it then return to this $19,700 level, or potentially returning all the way back down to the kickoff of this launch of 19,300. And that would be based upon the supply and demand zone that we created here on this 4-hour candle. And this 4-hour candle was right here. It's actually a little taller than that. So the top of that one is 19,330. If we were to see the continued melting process of Bitcoin. So right now it is holding really strong at this new support level. This is basically the final breakout zone to the downside if it loses that level, and that level is exactly 20,000. So we don't want to see Bitcoin lose 20,000. We're going to continue watching to see if it holds strong. On the 4-hour charts, it is bearish. Jump to Ethereum. Ethereum has rejected off of our 4-hour supply and demand zone to the upside again. This previous 4-hour candle, actually, it moved up, rejected, came crashing down. Now it is at one of our extreme zones based on the Japanese candlesticks here. The tippity top of this candle, it has broken that as well. So on the Heikinashis, it's not showing the break. Japanese candles, it is showing the break. When we flip to the Heikinashis again, now we need to have this new level. This is our support level. We cannot lose the 1485. If this continues to drop to 1485, the last hold level is here at 1480. And this is on the 4-hour. If we lose that level, there is a possibility we return back down to these levels here at 1350. So this economic news coming out that the Federal Reserve is still going to be hawkish has created the potential of the drops of all of crypto, all of stocks to come down to a final bottom level. So we will continue watching all of these as well. Make sure you subscribe so you can follow along. Shiba Inu also, when we check Shiba Inu, it came back down again to our long-term trend line support that's all the way back from June. And this trend line has been holding extremely strong. Remember when it broke out of the top side, it came back down and then made the move up finally, up into our zones that we've been talking about. Those are weekly supply and demand zones. Breaking down, holding strong. If we lose this, our next level down for Shiba Inu gets us to this level here, which is going to be the quad 1036. That would be the next level for a support level there. And then if we break those zones, there is basically a last and final effort of a hold zone here, 50931. If we don't hold that, we may be returning back to the June lows for Shiba Inu as well. And then that would get us down here into the 50740 territory again. And looking at the 4 hours, we are bearish. And at the daily, we're still bullish here. It has not flipped over yet on the Heikinashis. It's starting to flip now on the Japanese candlesticks. All right, so now we're going to do a final run through on my algorithm for XRP. Obviously, the charts are not going to show it, just my other indicator system I have. We currently have the 1 minute bearish, 5 minutes bearish, 15 minutes bearish, 30-minute bearish, 1 hour is bearish, 4 hour. Remember, 4 hour, we talked about the most important level of holding is on the 4 hour. We don't want to lose support on the 4 hour, and that is our exponential moving average ribbon of the 50 exponential moving average staying above the 1100 exponential moving average. So that would be the blue line here and this red line right here. The red line has now officially crossed back below. Okay, it's been doing this up, down, up, down, up, down thing. So we'll stay strong. Last time it dropped down below was here, and it did have a lower low than where we're at now. It's just now crossing. We have also bearish view down here on the RSI. Bearish view on my indicator. Daily though, so daily is still up in the air. It still has some bullish sentiment. It's got some bearish sentiment. And the interesting thing here on the daily is really if price comes down below the 50 exponential moving average and then breaks back above. So here, and then kind of rolls back up and rides that to the upside, we could see some real bullish momentum from there. We're showing bearish here, still dropping there. So does this come? So as this drop happens, how far, how deep does that go? That's what we're trying to discover. That's what we're watching. It very likely, I mean, it could finish the move, right? So if it finished the move, it comes down here, 34 cents. That would come all the way down here, clear us out for the oversold territory again. Look what happened last time. We had a bullish divergence on the daily. Imagine that on the weekly. So I still want it to make a new lower low, but that's just my personal, I want it to be a bullish divergence on the weekly. So we need the RSI to come down slowly, and we need the price to come down fast, clear that out, and then just make the move back up.
If you're ready to earn an extra $200 to $3,000 per day in passive income, just like the Run Guys do every single day, then like this video, subscribe to the channel, then click the link in the description of this video to learn the Run Guys' #1 way to start earning passive income online with crypto today.